Welcome back, guys. Ron here once again, and before we get started, go ahead and give this video a thumbs up if you are enjoying it, and give it a thumbs down if you're not. So once you watch it, just don't forget, guys, show your support for the channel. If you have not subscribed, go ahead and click the subscribe button and notification bell so you get notified every time we upload a new video. So let's go ahead and get straight into it. So the big question, guys, I was asked is, why do so many traders, people that have been trading, love to see these big sell-offs? Why do people get excited for market crashes? There's only one simple explanation I can give you guys. It becomes easy to make money on puts when the markets are crashing. Why? Because the markets tend to take the elevator down and the stairs up. I mean, you can clearly see this just looking at this chart right here. Look at the violent moves you have when you have a nice solid block lower, like you see here, right? Look at this nice solid push, right? And then look at how it took the stairs back up very slowly, right? So it took the elevator down very quickly, very rapidly, right? And then it came back very slowly. It said, oh, you know what? I got to get back here. Let me take my time. You may get one of these once in a while, but overall, the moves higher just tend to be very, very much slower as opposed to these moves lower. You see these big red candles, right? So why do people get excited? It just becomes easier to read. It becomes easy to see, hey, man, this is maybe an extended move lower. And again, the moves lower don't last as long as the moves higher. So you can see they're very short-lived. But look at these massive moves, right? They're massive. But the accompanying indicators that come with them is things that like the VIX. You get the market internals that we cover, right? In the group, you guys know everything just lines up to the point where it's like it just becomes clear that this is going to be a massive sell-off. Along with the markets themselves, obviously, clearly showing you that they're selling off. You get the market internals that are telling you, hey, man, this is going to be one of those days. And then you're able to take advantage of moves like this and just ride. And every time you get a bounce, you just short the bounces, right? Because you can see here, the moves higher just take a little bit longer to go up, right? And it's not always the case, guys. Obviously, you see here, sometimes it's nice and slow moves lower. But overall, when you start to get those massive pushes lower, they just tend to be massive, and they tend to be furious. So let's take a look here, for example, at last year. And then how do you prepare? How do you get ready for these, right? So obviously the signs are all around us, guys, and everybody's right now, you see it all over the news, you see it all over YouTube. The next downturn is going to be a bad one, right? The next downturn is going to be a bad one. Everybody's saying it. Everybody's predicting it. Everybody's trying to predict when it's going to happen. And again, I think I mentioned it on a couple of videos ago where, you'll see some YouTube video channels out there that they're saying January 14. Some other ones have March 27th. Obviously, some of them say, obviously, after the election on November. So it's impossible to try to predict these things, which is why we focus on execution. So at the end of the day, it doesn't matter. If you know it's going to happen tomorrow, like I said yesterday in the last video, is if you can't properly manage the execution. You could jump in here for puts, but you got out at the 200 EMA and never got back in, and you missed the rest of the ride. That was useless, right? You just wasted an entire move. Moves like this don't happen every day, right? They don't happen every week, and you just gave all of this up because you got out at the very first target, right? So it's little things like that you have to pay attention to. But again, look at this massive move lower, guys, right? And then look at these moves higher. So this was a good one, obviously solid moves higher here. But overall, the move back up to these levels, look how long it takes, right? Look at how long it took to get back up to this level here compared to the move lower. So this is why it gets exciting when you see moves lower, rapid moves lower. Because, when you go and compare the VIX, this is August 20th of 15th, right? And again, if you go back and look at the VIX, I can promise you that the VIX was pushing higher all through these days, right? So let's go ahead and go back there. August of 2015. Here we go. August of 2015, guys. So you guys see this, right? Look at the VIX. Look at these indicators, right? So the indicators, the market internal, this is not just the only one, guys, because we obviously use more. But look at this indication. When you see the VIX push over 20 with this mass push, right? This fast and furious push. Look at this push, right? There's no doubt that the market is going to keep going down. So it's like when you see that, you have a good indication to say, oh, yeah, let me take advantage of this crash and go along with it. Don't fight it. Don't fight the market. Don't fight what's actually going on. Don't fight the momentum because it's there. And why do we get excited for these? Why do people get so excited for these? Because look, they're short-lived, but they're very, very profitable, as you can see here, right? They're very, very short-lived, but the pushes are massive. And then when they come back, then you can just ride the wave back up on the markets because the VIX just continues to trickle lower as that's where it wants to be, right? It wants to be at the bottom floor, which is around 15 to 12, 12 to 15. And then it hangs out there before it wants to push higher again. So those are the things that you want to keep an eye on. So how do you prepare for these days, right? How do you know when it's going to happen? And you don't know when it's going to happen. That is first and foremost. Don't try to predict it. Don't try to get ahead of it because it's not a good idea. What you can do is study. So I covered it on the video from Sunday. Study the charts, get ready, start looking for divergences, start looking for the signs that are saying, hey, this may be coming and it may be coming soon, so that you can start preparing for it so that when it is here, you're ready to execute without hesitation. So the first thing you want to do, obviously, is study the charts, right? And then when the market opens, have a plan for the execution on the stock that you're looking to trade. And then when you see the market internals, right? So the examples like the VIX, clearly pushing higher with high momentum. And the VIX, obviously, is a contrarian signal. You want to see it pushing higher as the market pushes lower. Then you have one signal. Then you use the other market internals. You use your support and resistance lines, right? You use all those things that you've learned, and then you apply it and make sure that you're holding. And then if you're following the 1030 management method that I've shown, that I teach you guys on the course, then you know how to hold things for the long run. And again, I've said it before, day trade with swing intentions. If you happen to have, 32, let's say you're trading the S&P, right? And you have 3240 puts and you're already at 3200. You're 40 points in the money. Why in the world are you not going to be patient with something that is deep in the money, right? Oh, let me just take my money here. Why? Let it run. If everything is supporting the move lower, you have a solid red bar here, right? And now you're at 3,200 at the end of the day. Why in the world are you going to get out of this? Let it run. Everything is supporting now the move lower. The VIX just shot up to 15, 17, 18, or 20. And then this thing just dropped, let's say 240 points. So it dropped 40 points. The VIX went up 3 to 4 points. Why in the world are you not going to be patient? You cut back and maybe make your position smaller, but be patient because this one contract can make you 10 to 15 to 20,000, guys. It's not impossible to make 10, 20, $30,000 with just one contract. I'm telling you, it's not that hard. You just got to be patient, So when you're in the money, right? You're in the money. And you're deep in the money, you have to be patient with your winners, And then with the ones that are most at risk, let's say you have stuff that is out of the money or closer to being out of the money, those are the ones that you want to cut first and then, take your profits on those. But the ones that are deep in the money, you hold those for a little bit longer so you can take advantage of those massive pushes lower. So like you get a $40 point drop. And then next morning it gaps lower, kind of like what it did here. So you see this push here, gaps lower, pushes lower, and then it sets up a reversal. That's a good time for you to reverse. So you say, okay, this thing pushed lower, right? Gap lower and push lower to where? Key area, right? So you see that line right there was a key area in the past. So you can say, oh, you know what, 1030, 1040 is starting to set up those reversals where at a key level on the daily chart, you're like, you know what, this is a good spot for me to start taking my profit. And that's when you want to start taking your profits. When you see that the daily formations are starting to set up potential reversal time frames, etc. You know what I mean? Alternatively, if you've been following us for a while, if you're in our webinars, another alternative you can do is convert that original position into a spread. Now you're playing both sides without having to risk any more money. So you got puts all the way up here. And now they're all the way down here. So they're worth a massive amount now, right? Now you sell a different strike on the expectation that this is going to reverse. And if you still have the time for these, when this thing comes back over here, what you've done is locked in your profits all the way down here for the original entry. And now when this thing reverses, now you have the potential to make even more money. And I can tell you guys, I've done this plenty of times. What happens is when you lock in your profit down here, so let's say you're up $5,000 on one contract here, right? You're up $5,000. You're down here, and let's say you have the 3140s. All of a sudden, the 3140s, you're down at 30. 70 or something like that, right? You sell the 3150s, let's say, right? 3150s are obviously worth more than the 3140s. So the difference that you're selling them for now, because you only paid, let's say, $10 for these when you bought them, now they're worth, let's say, 40, and the ones above it are worth 60. That's obviously more worth more than the spread that you have here, right? So you already locked in that difference, that $5,000. So if you sell these, let's say yours are worth 5,000 or $60 or something like that, right? When you sell the ones above it and they're worth $70 or $80, what you've done is locked in that $50 profit down here, and then when it reverses and the ones that you sold start to lose value, now you're making more money. And I know that's a little confusing to see, guys, but basically this side of the spread is in the green and everything is in the green here. So now normally when you have a spread, you have a diagram that looks like this, and this side is below the zero line. So it's below the zero line, and this is red and this is the green side. But when you do it where you're locking in that profit, you're actually making money no matter what happens from this point on. So, and again, I know it's a little more hard to understand just from watching this video. We cover it in a little bit more detail on our webinars, but just understand, guys, you have more options when it comes to options. You have more options than just getting in and out. You can do a lot more if you just take the time to use the tools that you have in front of you. So do that, okay? So when the market starts to turn around, guys, and they're expecting a 50% drop. And the 50% drop from here, guys, is going to be massive, right? That's going to be an awesome, awesome drop. So think about it. Think about this drop from here. I mean, look at this. We're at over 3,200, right? So we're at 3,240, which is when they predicted the move higher from here, it was to 3,240, the additional 5%. I remember that because I was trying to buy these 3,200s and 3,240s, and I just didn't get a fill at the price I wanted, and look at where it went. So it went exactly higher. So I was trying to do the double play where you buy the markets and you also buy the VIX. I only got filled on my VIX. And I just never tried again to get my market. But obviously, look at that move. So they said, hey, the market is likely to move another 5% once it broke these levels. And that's exactly what it did. It literally, I remember reading that article and it said 3,240 is the next level. And look at where it is. So now you got to take that into consideration. So it did the 5% additional move. So now when this thing decides to drop 50% from here, so obviously 3,000, think about it, guys, 1,500, 3,200. So you're looking at 1,600. So it's looking to make a drop basically like this, right? All the way down to 1,600. Think about that drop. How much can you make on that drop? And that's going to be a fast and furious drop, right? Think about that. So how do you get ready for that? What is going to give you the confidence to actually take those plays, right? So again, looking at this on a more zoomed out level, guys, look at these drops compared to these pushes higher. Look at the stairs. Now look at the drops. Look at how fast and furious. So very short-lived period, right? Compared to the moves higher. The moves higher just tend to take a little bit longer. Short-lived period lower. Some consolidation, moves higher, consolidation, moves higher, 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 higher. So just take that into account when the next move lower comes in, because it's going to be fast, it's going to be furious, and hope you guys make some money, be profitable and enjoy the move, because it's going to be fun. And why is it fun? Because it's just fun to watch your account grow. You know what I mean? It's fun to see that happen. And I hope to see you guys experience that. So that's pretty much it for today, guys. I hope you guys enjoyed. Don't forget to click that thumbs up. And I will see you guys on the next one.